Video, I'm going to be talking about my analysis on gold and what I'm anticipating to see in the marketplace. So, firstly, as you can see on the daily time frame, we're bullish, creating higher highs, higher low, and higher high. Now, as you can see, my Fibonacci is already on the charts. Right here, anything above the equilibrium is premium, anything below the equilibrium is discount. Right here is our extreme premium zone, and right here is our extreme discount zone. As you can see, price came here to our extreme discount, expanded, rallied into the extreme premium. Then we saw the displacement into discount, tapping the last impulsive move to the downside that mitigated the extreme discount. And after that, we had this expansion rallying into the extreme premium. So now what I do in cases like this is I outlined my current highs and lows. And right here is my immediate high on the daily time frame right here. And I'm going to make it a different color. So right here is the high. And then we'll have the low resting right here. And right here is a break of structure. Now, in as much as I'm bullish on gold and I'm still anticipating to see higher prices, I'm not going to just randomly jump into the market, right? I'm going to have realistic key levels where I'm going to be anticipating for price to retrace into those key levels, and then I'll look for a smaller time frame shift to market structure. So I'm going to outline the areas that I'm going to be looking at. So the first thing I do, I go to 2-day time frame, and the reason I'm doing this is because I want to see the bodies of the candles from the higher time frame. Right here is the high that got broken, so I'll be anticipating to see price retest this key level, even if it's the bodies of the candle. And then the next thing I do, I start to scale down to the daily time frame. And now on the daily time frame, I can see that right here, this was the last move to the downside before the expansion that broke the structure. I'm also going to outline that key level as well. So these key levels are the key levels that I'm going to be watching. So for me to engage into the marketplace, I'm going to be anticipating to see price retest this key level. So it's either going to retest here, or it's going to retest here, or going to run the sell side liquidity right here. So what I do is I'm going to be patient to see what the market is going to do moving forward. So the moment we open for next week, we have FOMC, non-farm payroll. We have non-farm payroll this coming Friday. So that means there's going to be a lot of manipulation in the market. So I'm not going to be jumping into random trades unless price comes into my designated point of interest. So if I do see price come into this position, whenever that happens, whether it's next week or next 2 weeks, the only time I'm going to engage and look for a buy setup on gold is if price comes into this key level and then I see a 15-minute shift in market structure. From here, I'm going to buy it. But if I don't see a 15-minute shift in market structure, I'm going to be on the sidelines, because it means that maybe price still wants to come into this key level, because this is a high level point of interest that price can easily retest this key level. Right now, it's not a certainty that price is going to come here, but for me to engage in the marketplace, I want to see either this key level retested or price retesting this key level, or worst case scenario, let's say for any reason the market became so volatile because of the high impact news that we'll have this week, and then eventually run liquidity from this low, I'm still going to be bullish, and I'm going to be looking for that smaller time frame shift in market structure. The moment I see a 15-minute shift in market structure, whether it's going to be after this low is taken, or within this range, or within this range, these three key levels that I outlined are the places that I'm going to be waiting to see a shift in market structure. Once I see a shift in market structure and price fail to create a lower low and then creating a higher high, I'll look for buys, get into the market, and then I'll be targeting for price to rally to the upside. Now, I'm going to also show you my key levels where I'm going to be taking profit. So the first thing, the wicks from this week to the high of the week right here. The midpoint is my consequent encroachment. So if I'm on any buys, once price comes to the consequent encroachment being this key level, this is the next draw on liquidity. So it's either price is going to open for next week and just expand into that position, or we could see a retest and then expand into this position. But this is my next draw on liquidity, the consequent encroachment. And once we're in there, if we do come down here and I get into a buy, once we're in there, I'm either gonna close 100% of the trade, or I'm gonna close 70% or more of the trade, because once we're in here, anything can happen. Price can retrace. Want to run another sell side liquidity before a continuation. But I'm still bullish, and I would like to see an all-time high on gold. So that is my analysis. If you have any questions, feel free to drop it in the chat.